I'm pretty sure a few days ago I spoke about Accenture versus TCS based on their recent quarter results, and the reason to choose both of them because of their rivalry right now, evolving rivalry right now. Because in terms of market share, they compete with each other neck to neck. In terms of employee headcount, they are growing rapidly. In terms of revenue, probably Accenture is quite ahead of TCS right now, but TCS grows 10% compound normally, and it has grown that way in last 4-5 years. So it is expected that probably TCS is one such company which can compete and match these Accenture numbers. That's why I chose these two companies and did a face off. But now this time I am picking up Wipro and Infosys, and we have the latest results just coming. I think just about 1 hour ago they posted their Q2 numbers, and we are going to talk about it. And as a side note, we are also going to talk about Mindtree, because Mindtree also posted, and Mindtree is a mid-sized company. And you would wonder the difference when you see between the mid-sized company and the large-sized companies. You would see, that brings a little bit different perspective about the IT landscape. So stay with me. We should explore all of them. Let us see Infosys results first, and when we see the headline number, it seems like a lot of things are going really well for Infosys in last couple of quarters. Why I'm saying so? From 10 to 12% annual growth guidance, they are now reaching close to 16.5 to 17.5% annual growth guidance. They are giving that kind of guidance. And remember, 3-4 years ago they were between 6 to 8%, and it was fine. They were finding it difficult. So in terms of their performance, they have almost tripled their performance from their lowest in 2017-18. That speaks volume about how this company has transformed under Mr. Salil Parekh. Now let's look at these numbers bit in detail. Their quarter on quarter growth is 6.3%, which is quite remarkable growth. We see the operating margin is under pressure. If you see this operating margin, they were doing quite well in, I think 1 year ago the operating margin was crossing 25%. Now it has come down 23.36%, though from previous quarter, I think that is not too bad. I'll talk about that in a moment, how their previous quarter operating margin was. And if we look at their large deal wins, it is quite healthy, $2.15 billion. It's not talking about outstanding order. TCS or Accenture spoke about the outstanding order they have at this moment, but still their quarter on quarter performance and year on year performance in terms of constant currency is quite healthy. When we look at the revenue mix, their digital contributes about 56% now. That means their 43 or 44% still comes from their legacy services. When we look at their revenue by their business segments, it doesn't look like any business is doing exceptionally well. It is the overall good performance, and all the businesses are doing decently in this quarter. So we do not need to highlight any particular segment. If you look at the financial services, it is bit low, but it is in the safe zone, which is close to 30%. That means 1/3 of revenue, 1/3 of the Infosys revenue comes from the BFSI sector. When we look at the client geography, you will see North America contributes about 62% now, which is bit better than the last quarter, and a lot better than last year. Europe is doing fine, and Europe is picking up. Rest of the world, it is bit lower than used to. India, I don't think there is any significant change in India number as well. Let us look at their utilization ratio, and their utilization ratio seems to be close to 88 or 89% right now. It is 89%. Last quarter it was 88.5%. That means people are not free at this moment. They have enough opportunities in terms of finding the projects. Let us look at employee metrics. When we look at 267,000 and 279,000, about 12,000 net addition they have, and that's on top of the attrition of 20%, which is way above, and that is alarming sign. While this would be alarming sign for companies, that means this is good sign for employees. You have ample opportunities. This number reflects that company people are switching job very frequently. So every fifth employee of Infosys is changing job. It is becoming a headache for IT companies, because people will continue switching job for at least 2-3 quarters, and that reflects from their annual growth guidance they have shown, and that is around 16.5 to 17.5. That means there is still an upside for Infosys. As long as we see that upside, probably employee will also see that upside and will find the place in other companies. So as I said, I will talk about the operating margin. If you see, the operating margin in this quarter is 23.6%, but last year it was 25.4%, and last quarter it was 23.7%. So from 23.7% it has come down a bit, while from 25.4% it has come down a lot. And probably because the company might have given raise, promotions to employees, and did a lot of hiring, that is reflecting in these numbers. These are the headline numbers from Infosys. So what this result says, that Infosys is having a very good time. What we saw in the TCS is not true for the industry, especially Infosys in this case. Just we saw that. Now we need to move to Wipro, and with these numbers we can safely say Infosys will have good time coming in next 3 quarters, at least in the stock market performance. We can't say anything about employees at the moment in terms of what benefits they might get out of this performance. We will have to keep a track on management commentary. So if I get to hear something, I will share that with all of you. Let's quickly switch to Wipro, because we also have to talk about Mindtree later on. Wipro's first of all, I must comment that Wipro's presentation is much better than Infosys presentation in terms of readability. So revenue coming around $2.58 billion, and the sequential growth is 6.9% quarter on quarter. I think Infosys result you saw 6.2%, it was 6.2%, and in terms of constant currency term, it is 8.1%. So that means it beats Infosys 6.2% quarter on quarter. But remember that number, that quarter on quarter growth comes on a higher revenue front, so it becomes challenging as you grow big in the size. When we look at the operating margin, it is coming around 17.8%, and you see some pressure over there as well. That means the operating margin story is quite similar for everybody, TCS, Infosys, or all, except Accenture. Accenture has been able to improve their operating margin even in these scenarios where their attrition has spiked close to 21% by their own admission, and by my calculation that their attrition is around 25%. So when we look at the strategic mix of how their revenue is coming, America contributes 27%, America 1 and America 2, this is how they have categorized. Europe contributes 30%. So Europe, they have good Europe command in Europe. Probably Thierry Bonaparte is doing the magic. Then if we look at the sector mix, 34 point comes from the financial services, 17% comes from consumer, 11 health, energy 12, technology 12, 6.7 and 5.0 from manufacturing and communication. So their big revenue comes from banking and financial, as well as consumer, as well as health. Let's look at how their how their digital versus legacy theme is working right now. While we saw that Infosys has about 56% coming from digital side, Wipro is doing much better, which is 61% is coming from their what we call it, the digital businesses. Now we need to look at how their attrition is spiking in this moment, and also how their net additions took place. Total headcount is 221,000, which is 20.5%. So at least at this front, both are at same level at 20% attrition rate. Quite big deal. Every fifth employee is leaving company. That's a big thing to control for them, and as long as this happens, probably they will continue to struggle in terms of operating margin. Now what is necessary to see here is Wipro is giving the next quarter guidance, which is 2 to 4%. That means now they see bit of stabilization. They are not going to beat the numbers of Infosys, which we saw just now. They posted about 8% in quarter on quarter growth, but now they are slowing down in terms of quarter on quarter growth from next quarter. That is the guidance. Now we need to see this operating margin story and how this pressure is playing out. Just look at here, in 2 quarters from 18.8% they have come down to 17.8%, and if you look at the previous financial year, overall that was 20%, while they did their best when they reached in Q3 21.7% in terms of operating margin. So they were most profitable during this time. So now you saw again Wipro has done tremendously in this quarter, and from last 3 quarters we have been noticing Wipro is outperforming the markets. That is reflecting in the stock market also, and this quarter is no different. And Infosys and Wipro are doing really well in this quarter. We just saw that. Again, there are only 2 downers there. One is operating margin, we saw the pressure, and the other one is attrition, that is making a big deal. Now let's quickly switch to Mindtree. That's a different story altogether. Now it is quite small in size, therefore we will have to excuse that. It is not a fair competition. I am just telling you the numbers over here. Revenue is about $350 million. That means they are reaching close to 1.2 billion at this run rate annually. Growth comes around 12.7%. that means they are better than what we saw in Wipro, which was 8% quarter on quarter growth, and Infosys 6 quarter on quarter growth, while TCS was a laggard with 2 some percent, over 2% growth. Now net growth is about 16% in quarter on quarter, and net growth is, they are much more profitable in terms of net growth. When we look at their client addition, I think this is nothing to mention there, nothing to mention over there. But people headcount, if you see, their headcounts are reaching close to 30,000 now. But what's important is their attrition rate is just 17%. Again, as I said, lot of times the attrition, every company reports attrition different ways, so there is no standard formula to calculate attrition. I would look at these numbers with bit of skepticism, but if we go by the management commentary, it seems like they are doing better than the industry leader like Infosys or Wipro. Okay, that was around Mindtree. And when you tomorrow probably you will start seeing these this positivity play out in the stock market. Mindtree, you all know, has grown massively in last 1 year, and you might see this result is impacting Happiest Minds, Tata Elxsi, Emphasis. That gives the confidence, because TCS really played out as a downer for IT companies, and Street was expecting, if this continues for Infosys and TCS, Infosys and Wipro also, probably that will set the clock back at least by 2-3 quarters for IT companies. But it turns out that TCS was an aberration, and what we saw in Accenture, what we are seeing in Infosys, Wipro and Mindtree, that is the common theme we should look at. Hopefully you enjoyed this discussion. We will come back with another topic very soon. Till that time, take care. See you soon.